and welcome to the Morningstar series, Ask the Expert. I'm Emma Wall and I'm joined today by Randall Goldsmith, Senior Fund Analyst for Morningstar. Hello, Randall.
Hi.
So there has been quite a lot of news about the commercial property fund sector, but of course it's not just people who hold shares in commercial property funds that have exposure to this sector.
Yes.
Multi-asset funds hold the sector as well, don't they? I thought perhaps you could highlight the multi-asset funds with the largest exposure to commercial property.
Yeah, well, you're absolutely right, Emma. I think, though, the key thing that needs stating at the outset is that it's specifically open-ended funds that invest directly in property that are the issue. Multi-asset funds can get exposure to property by way of REIT funds. They can get exposure by way of closed-ended structures, but it's specifically the open-ended directly invested property funds where you've had the issues of suspensions of redemptions to investors. Now, of the funds that we rate, there's really just Premier and Jupiter that have got exposure to directly invested open-ended funds. Premier actually had very significant exposure to property. Over 20% in two of its funds, the multi-asset distribution and monthly income funds. However, it's been reducing it significantly over the past 18 months, down to about 10% now. And that 10% is actually a mixture of REITs, closed-ended structures, and directly invested. I would say that the latter is only about 5% in the Premier multi-asset funds now, and basically ahead of what's happened, they've got out of the funds that have suspended. For Jupiter, the exposure has always been smaller. They've got it in two of the funds in the Merlin range. That's the Merlin Balanced and Merlin Income funds. In each case, it's none of the funds that have suspended. It's their own dedicated vehicle. It's only 3% of the portfolio. And
you mentioned there about how Premier have been reducing their exposure, and I think that's a very important point. It's happened across the multi-asset range, not just the ones that we rate highly here at Morningstar, because even before Brexit, this was a sector that was looking very toppy. A lot of people were looking at commercial property and thinking, well, 2016 is not going to deliver what we were able to get out of commercial property in terms of total return from 2015 and from 2014. So is that something you've seen across the sector, then people have been reducing that exposure?
Yes, I think that's been happening generally, but we're monitoring most closely the funds that we rate, and it's important to monitor exactly how a fund gets its exposure to property.
And of course, even if a multi-asset fund is invested directly in some of these open-ended commercial property funds that have had suspensions, it's not a concern for the multi-asset investor in the same way it might be for someone who holds those funds directly, is it? Because multi-asset fund managers, of course, have extra liquidity that they can pull from different parts of their portfolio.
Well, of course, that depends on exactly how much the multi-asset fund has invested in property. I think the key thing with property and the whole idea of investing in property for diversification and of risk, the issue with it is it's very difficult to quantify. Properties, it's a great idea, at times when it's undervalued, to improve the returns of a multi-asset fund. But as you say, it had been getting overvalued some time before the Brexit vote, and to hold it just for diversification purposes, it's an issue because it's difficult to quantify. Measures like standard deviation, they don't really have the same meaning for property. I think, for investors looking at multi-asset funds and their exposure to property, you can't quantify it, but what you should watch out for is for property becoming the dominant risk in the fund, because when property becomes the dominant risk, and maybe you could take a rule of thumb here, like something like 20 to 30%, above that level, then the problems faced by the underlying property fund, they can become the problem for the multi-asset fund itself.
Randall, thank you very much.
You're welcome.
This is Emma Wall for Morningstar. Thank you for watching.